Good morning. It is April 21st, 2023. Lots of data going on here because we're in the heart of earnings season, but let's take a look at what's happening to companies inside. Overall, you're hearing, earnings season's pretty good. The majority of companies are beating expectations, whether it's revenues or earnings. But you look under the hood and it's not such a great story. Number one, companies aren't giving out full guidance. When that happens, you should be a little bit worried. They either don't know what to say and it's looking pretty murky, so it means that they don't know it all and it's going to be hard for them to forecast, or they do and it's really not what they want to talk about right now. So that shouldn't give you a lot of confidence. And then two, look at companies like P&G. They might have beat on the quarter, but you look under the hood and organic revenues were up by 7%, but volume declined by 3%. Customers downshifted to cheaper brands, and they had prices that were up by 10% year over year. That means that they're trying to squeeze more out of a hurting customer, and that rarely ends well. So, when you think about these things and you're going through earnings season, we'll keep you up to speed on the trends that we're seeing, but we're seeing this across the board outside of luxury. We're seeing that, okay, maybe the customer who has a lot of money is not going to be as price sensitive, but a lot of other people are. They're extending their purchases. We saw that, remember, in corporations with CDW's earnings, and we're seeing it here with P&G overall beating, but there's demand destruction. Let's head over to the Longbow dashboard and see where we are overall in the market today so you can kind of set up before Monday. So here I'm just giving you a few securities. I've got the SPY, Qs, and VIX. A lot of people are talking about low volatility now, and if the vol stays low, equities can melt up. That is definitely true. You can see that volatility itself is bearish. So on a short term and medium term, it's been going down. But any kind of big size event can pop that up. And also, it's one thing to say you can trade around in that level, but we wouldn't be, throwing caution to the wind and saying, okay, let's say that this is going to be the bottom that we saw in the first quarter. So be careful with this. Doesn't mean you need to use options, because that obviously can be very difficult for people to make money. But what we're saying here is you don't need to bet on volatility, but you don't need to bet that volatility is going to stay low either. And the SPY middle of the range Qs actually were lower before, but we've seen the market bounce back a little bit from its lows. But look at this, you're seeing a narrowing of the range. So let me pull this so we can see a little bit more. You've got this, you've seen this melt up in Qs, in tech that is, but now it was, below the bottom end of the range. It came up in the last hour, but this is just showing you here that it's got positive momentum, but we're really bouncing around in this range, and the range is narrowed a lot. So as we get through earnings season, as companies are reporting, we expect this range to really blow out. That means the volatility in tech could go up. So if you are thinking of options, maybe this is the place if you can get options on a position that you're managing, or you are going to take a view of where things are headed. We wouldn't expect this in the next few weeks to stay this thin. We would expect that band to expand, but we are nearing the low end of the range. It is in a bullish formation, so necessarily you would think you would add. But again, once you get into earnings seasons, fundamentals usually trump the technicals. So you really should be thinking about the fundamentals, and if you're going to be trading on anything now versus just these technicals here. But we want to keep you up to speed on where they're at so you can prepare the best with your portfolio. That's it for today, and we'll see you back on Monday.